my Monday morning market wrap. It's a massive week to start off November after some big moves in global stock markets over the course of the last month. And whether it's Melbourne Cup Day here in Australia tomorrow, whether it's the PMI surveys out in China, Australia and around the world today, we've also got TD inflation in Australia, which will be important given that the CPI last week was low in Australia, and that will help inform people's view of the RBA rate cut or not tomorrow afternoon. We've got a Bank of England meeting, and of course we've got non-farm payrolls at the end of the week. It really is a big week for markets. But it's also one of those weeks where we get to talk about how the previous month ended. And in Europe, the DAX was up close to 14%. The CAC in Paris was up close to 10%. London lagged, of course, weighed down by the miners and a differing outlook for the Bank of England from the ECB after ECB President Draghi and his chief economist Peter Praet essentially promised that more QE was coming in the December meeting. Over the weekend, and we might see this in euro over the course of the day, it could probably outperform a lot of other currencies. Over the weekend, talking to Il Sole in Italy, I probably said that wrong, but anyway, Draghi tried to put a little bit of two-way into it and said that it was still an open question whether Europe needs more QE or not. So, perhaps that's trying to put a bit of two-way in it. Perhaps it's a pushback from the Conservatives on the board that if he is going to win the day, he's not to telegraph it to markets and try and push them into a corner. But whatever it is, it probably helps euro to a certain extent. I'll talk about the euro technicals in a sec when we get to the charts. When we look at the US, stocks were down on Friday night, only a little bit, 0.5%, something like that. But if we look at the S&P, the bellwether market, it reversed off the 2100 level, which I've been talking about for a few weeks here. My system, as I've been saying on these vids over the past week or so, my system's looking for a top, and I'm looking for a move down to 2048, 2050, something like that, and then we'll see how the market looked. In terms of the Aussie market, it was a really interesting day for the ASX on Friday. Big stocks, the big ones, the banks, the miners, Telstra, Woolies, those kind of guys, they were all down. Yet the market was only, they were down multiples, but the market was only down 0.5%. And that's because there was a lot of stocks on the other side of the ledger, smaller stocks granted, but a lot of stocks up more than 4%. The top 10 were all up more than 4%, and then there was myriads of 2s and 3s and that sort of stuff. So the market didn't look too terrible. On the technicals, though, it does look a little bit tenuous, and we'll talk about that as well. For the Aussie dollar, we've had a gap lower this morning after the Chinese data over the weekend. The NBS, so the national version of the PMIs, came in a little bit weaker, 49.8 for manufacturing, 53.4, I think, having a mental blank here, for services. Both a little bit weaker than the market had expected. That's the official data. 12:45 today, Sydney time. We'll get the release of the unofficial, the market data for China. So markets will be watching that very closely, and we'll have to see what happens there. So it's going to be a very interesting day. And that Chinese data has put the Aussie a little bit lower. But it's fair to say the US dollar was a little bit weaker Friday night. One thing I wanted to highlight today, when you think about it, what were US stocks up? 7. Sorry, I'm having a mental blank here again. Blah, blah, blah. 7. So the Dow's up 7, the Nasdaq's up 7, the S&P's up 6.5 during the month. So, what we've got, pardon me, what we've got is a pretty good response. We've hit technical levels. We're back into the stretched kind of valuations that we saw before the big August sell-off. We've got an economy that looks like it might be slowing, and a Fed that looks like it might want to tighten rates regardless. Now, as you know, I've been saying consistently, I think zero interest rates are completely incompatible with where the US economy is in the moment. That's as much because if they need to lower rates again, they've got nowhere to go. They're going to get themselves stuck in this Japan scenario. But I wanted to read you something that hit my inbox over at Business Insider, which I put both in my daily 20 seconds report, my Go Markets report, and also my Aussie diary report, which comes out on a Sunday night. Just because I thought it was so important, and because of the way they characterised it. Now, they highlighted something I didn't know. So the two analysts from Deutsche Bank, Stuart Kirk and Rinesh Bansal, put out a little note. It was a tiny little note. It was in the DB Weekender, which I get from some contacts. Anyway, what they're talking about is equity investors need to be careful. So here's a quote, and please excuse me reading it. Equity investors were whistling past the graveyard this week as the Federal Reserve suggested it is still contemplating a December rate increase. Oops, that's gone. Sorry about this. That's Windows 10 auto take over the whole screen. Suboptimal. Right, December rate increase. Why the uncharacteristic display of nerve? Perhaps the meager 1.5% third quarter growth adds to skepticism the Fed will actually pull the trigger. After all, the 31 rate hikes since 1994 were preceded by an average of 3.9% quarterly expansion, whereas 1.2% average growth heralded rate cuts. Or perhaps investors are increasingly certain the rate rise does not spell doom. Indeed, the S&P 500 rose 10% on average in the 12 months following those 31 hikes, but fell 7% after rate cuts. Be careful not to whistle too gaily, though. The only time the Fed raised rates after a sub 2% growth quarter, a 3-year equity bear market followed. So, straight from the horse's mouth, two equity strategists at Deutsche. So that's something to think about. And it's something to think about in the context of what's going on. It's my Reuters screen. What's going on from a technical point of view. If we have a look, here at the daily price action of the S&P. And we'll actually just take it back to weekly for a bit. So the context, we've had this very, very long bull market. We had this topping pattern where you can see my crosshairs moving. What looked like a topping pattern had a breakdown, nice bottom with in 2015 close to 2014 low, and now we've had this rally. And the rally that we've seen is now in the zone where this previous, congestion zone, topping pattern, however you want to characterize it. Now, we're still above the 200-day moving average. And when we broke above the 200-day moving average, I said I expected it to go to 2100 and possibly 2135. Now, if you remember, I said that last week. I said we could go another 10 points or we could go another 45. So that's where we are now. If you look at the way that I trade, I use MACDs, I use these moving averages, my Bollinger Bands, and candlesticks. I'm not a classic candlestick kind of guy in that I can tell you that it's a doji or a dark cloud cover or that kind of thing. I don't tend to use them that way. I just think candlesticks for me are very instructive in what they say about a market. Certainly when you get a long tail, either way, that's very constructive and tells you something about the way that the market has reacted to news or data or price action. But for me, if I look here, I'm starting to see a short-term top forming. Not only did we get back to this breakdown level that we had back in August in this 2100, we've got a downside move, got my MACD signaling the latest bars lower than the previous bar. That normally tells me that we're going to see some a price reversal. So now for me, we're looking at a move back to 2061, which is the 200-day moving average, and probably down to my fast moving average, which is 2047. So somewhere in that 10-point range is where I'd see the market slipping back to. If we have a look at the local market, the impact there, We've already broken back into our box. If we say this was the top of the box, had a breakout, test, crash, bang. This is the daily chart. So a reasonable performance, but once again, I'm looking for lower levels. I'm probably looking for a move down here to this 51.48 kind of region, and then we'll see where we go from there on the local ASX. And I'd be selling any rallies towards the top of the box. If we have a look at Euro while I'm here looking at charts, can you see that? I'll blow it up. So this trend line is the trend line from the March lows. You can see that we've had a breakdown, a nice big dip. Remember, we got outside the Bollinger Bands. It's always a signal for me in any time frame, whether I'm trading 1 minute charts or I'm trading weekly charts or monthly charts. Always a signal for some sort of consolidation, whether it's a topside move that then has to pull back or a downside move that then has to consolidate and rally. So we've seen that. So my bias was for Euro to rally. It rallied and tested the old trend line on Friday night and came back. That looks, it's an up day, but it doesn't look that great. But as you can see, it's a little bit higher this morning after what Draghi has said. So my sense is we're going to get a test into this support zone. Very much it's the opposite of what I was talking about in the S&P. And I'm guessing that 111.2030 from here, which is 110.36, up to 111.2030 is probably the zone of resistance that Euro will test at some point. Of course, the 200-day moving average is there at 111.07. It's flat. There's no real. It's flattening out. There's no real trend there, but we'll have to wait and see. If you look at it longer term, though, it does look like if that area is rejected, that we are going to see a move back down into the 108s or something like that. In terms of the other markets, just briefly before I go, Aussie yen is really struggling to break higher, even though it probably should. And if we have a look at the Aussie itself, the world's favourite punt, we've had a nice little rally. If the RBA doesn't cut, and I don't think they will tomorrow, we'll see a further rally and maybe a test of resistance up here at 71, 60, 70, 80, and then we'll see. But we're loaded with data this week, so much data. ARG PMI is out at 9:30 today. We've got inflation data today. We've got retail sales later this week. We've got the RBA. There's trade. There's so much data, and then of course we've got the RBA statement of monetary policy on Friday. So it's a really big week for markets. It's a big enough day. 12:45, the release of Chinese market PMI. That's going to be huge. And of course, watch the crude market. Crude rose 4.4, something like that, in NYMEX terms last week. 1, 2, 3. Are we now about to do the fifth leg of this? Not much of an Elliott wave-ition, if that's a word, but it's possible that we do get a bit further run on crude. Overall, though, I think it's constrained in the the $50 range, $50, $51 range on any rally. We'll see how it goes. But that's it for me. It's a big day. Things are still trading really well. So keep your eye on your charts, keep your eyes on your levels. Watch that S&P and watch the Euro. They're potentially the two best trades out there today. Also, dollar yen has been moving around. I'm not playing dollar yen at the moment. It's too ratty for me, even though it's going nowhere. I'm bouncing up and down on the spot. And don't forget, the Bank of England's got a meeting this week too. So if you have a look at your sterling charts, you'll see that there's a nice big old downtrend, and potentially, it could get as high as 156 or something like that if this US dollar weakness continues. But that for me, once again, is a sell. So that's it for me. I'm Greg McKenna. You can find me on Twitter at Gregory McKenna. You can find me at Business Insider always. You can find me at my own website, gregmckenna.com.au. If you feel like you want to talk about something or drop me an email, do it via Twitter. It's probably the easiest way, and I'll respond. And if we need something bigger, you can DM me. But have a great day. Good punting, and I'll see you tomorrow morning. Bye for now.